Welcome to the Cattle Talk Podcast, your weekly breakdown of cattle market fundamentals, key news, and the insights shaping the industry. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
This is Mike Miner. I've got Jeff with us here today. How's it going?
It's going good, Mike. Thanks for having me on.
Good deal. We're going to talk about the cattle market here a little bit today. Happy to have you on July 2nd, ahead of the weekend here. No trade tomorrow, so the markets are closed here this afternoon. Friday off, long weekend, and then back at it again Sunday night for the grains into Monday morning. So on the cattle market, kind of just we're on a little bit of a red streak here on futures. I wanted to start there, Jeff. We're selling off a little bit. Very unlike the cattle futures last, not so long, 6 years.
Yeah, they've kind of taught you a lesson not to get too comfortable with a market that's slipping lower. But a little bit longer red stretch than what we normally would see here. You know, we've seen a lot of these breaks, and we've been able to rally right back to the old highs and surpass those highs, Mike. I'm not so sure that that's going to happen again in this case. You know, a few things that we've always been looking at and talking about. One of those is the seasonality of this business, right? I mean, since we've added the weight and since we added the days on feed, you know, now the shortest time of year in the market ready supply would be in that June timeframe. So as we left June behind us here, I kind of feel like the clock is ticking a little bit. As far as each week that goes by, you get just a few more cattle of the new crop cattle that get interested or more available, if you will, to be sold into the cash market, Mike. I think, you know, that's maybe one of the top things that makes us just a little bit more nervous on this market than maybe what we've seen in the past.
All right, I like it. How does that take us into the cash activity this week? Because when you look at the August live futures, you're 239, 22.5, and as I've quickly scanned what cash cattle have been trading at, they are a little lower, $3 or $5 lower this week, but still mid 250s. So a positive basis is something we've got normal to. Don't get me wrong, but pretty good spread this time of the year, isn't it?
Yeah, no doubt, and that's what's motivating the pulling ahead of some of these cattle, and maybe even getting rid of some that have plenty of weight to them. We've kind of have both sides of the coin going on because we're not really seeing like huge drops in the carcass weights that are going to town. So we're not pulling it super aggressively on that supply, Mike, but we do know of some situations where people have some new crop calves on feed, and you know they can put more weight on them. They can move them a little bit quicker, and as the marketplace is enticing us to move those cattle maybe a little quicker than what we originally thought, and so that's where the $15 plus basis that they continue to keep in the marketplace, that's what it's trying to do. The market's trying, gauging, okay, how much does it take here to move a few more head of cattle? And each week that goes by, of course, that same inventory will put more weight on. People will be a little bit easier to let those go, and that's what the August futures is trying to anticipate.
Sure seems like slaughter volumes seem to be dictated by processing margins at this point. When the margins improve a little bit, they really ramp it up. Going into the holiday, it's always interesting seeing how the packer, one, anticipates a holiday, and two, reacts right after it. Box prices have weakened a little bit going into the holiday here. What do you think that's going to provide through the 4th of July, one of the key weekends, holidays of the year for meat demand in every category? What do you think here? Light retail inventories right now could set us up pretty good if we do come out of this weekend short, but probably a reason they are too.
Well, like Mike, I mean, the market really likes to rally. That box beef, especially on the choice side of the things, really likes to rally going into the 4th of July. And as you were pointing out, we're not seeing much of that this year. So the next question will be, if we didn't have this $20-$30 spike going into the 4th of July, will we or won't we see the $20 or $30 drop after the 4th of July? That's going to be, because that's a very strong seasonal. And that's going to get really interesting here and into next week and the week after. We are seeing a few lower values coming right into the holiday here. I don't know what's going to happen there. We certainly are continuing to keep our kill levels, very low, like you were indicating, but we also are putting quite a bit of meat out there right now. The past 3-4 weeks ago, and we were worried about this happening sometime in August. We weren't sure how the market was going to react to it, Mike. As far as the point in time at which the number of cattle that you're harvesting, the additional weight that we've put on year over year, and the additional imports that we're seeing, when that was all going to come together and actually increase the amount of meat that the U.S. that's available to the U.S. consumer, increase that over top of last year. Now that's actually happened the past couple of weeks as we snuck our kill levels up just a little bit. Now one of those data points is this past week, which is probably a little bit overinflated coming into this very shortened holiday week, right? But we're kind of at that point when we're between the lower numbers going through the system and the increased weights. We're down 3% on production, but we are still showing a 5% increase in net imported meat. So we're at the point right here, right now, we're putting a little bit more meat out to the U.S. consumer than we did a year ago. We also have very similar cutout values than what we've seen a year ago, going into a time frame where that usually likes to drop. So that's all going to be very interesting in the next couple of weeks to be paying attention to.
Anything to be said about the western part of the Corn Belt where you've got South Dakota, Nebraska, Kansas, Wyoming, Montana? Anything to be said about the weather? We've been picking up some extra rainfall here recently in that part of the world. Is that going to change anything in the replacement market, anything like that?
It definitely is going to matter. Just a quick review. We were convinced here, was that maybe midwinter or something, Mike? We were pretty convinced we were seeing more heifers being retained. We were seeing more, less cows go to town in that, and then it just didn't rain all spring.
Got dry.
Yep. And we definitely feel like we've seen more cows go to town. We've seen some heifers come back into the feed yards because of the weather situation. Now, what's done is done. It's going to be hard to bring those heifers back into the herd at this point. It's going to be really hard to bring those cows back into the herd, by the way, Mike,
especially if they're dead.
Yeah, exactly. That's going to be tough. So, a lot of that we've kind of made that bet, but I think the motivation is going to quickly come back to, hey, how do we get some more inventory around us, right? And so you might see the cow kills slow down a bunch as those ranchers really fight to keep everything they have around on inventory and maybe try to get some brought back from some other portions of the world. And then, fast forward into next fall, into next winter, motivation is going to be there to grow the cow herd in my mind. And so if you've got the rain, if you got the grass, you got the feed, that's going to happen.
Could be some major long-term implications because
For sure.
of that.
Yep. I would think it's going to be really interesting to be watching.
Well, we're going to wrap this podcast up talking about the Trump administration, because how dare we not mention them during a market podcast. But the USDA announced $500 million funding plan to expand the U.S. domestic fertilizer production market. Also, they were working on some money thrown at the packers as well. So what can you tell me about the money and where it's going?
Well, per the normal that we've gotten used to the last couple of years here, we have some big numbers and some crazy stuff that gets thrown out there, and not a lot of detail, right? And so we'll see where this all lands, but incredibly interesting that we write these big checks, and then we exclude some of the industry from those dollars, right? I mean, the fact that he basically came out and say, hey, we're not giving this to the big four. The big four kills 80% of the cattle, Mike. So it's like we are pinpointing, handing some money out to 20% of an industry. It's a very interesting approach, I guess. And
That's a big, I mean, because they're doing $500 million through payments to eligible beef processing plants.
Yes.
Like, that's a big number for 20%.
Exactly. Take that $500 million and give it 20% of the industry. That starts to talk about some big dollars. Some quick math on that. If you kill, roughly 30 million head or so a year, 20% in the 4 to 4.5 million head, that's you're pushing over $100 a head for an entire year's worth of business. That's impactful. So what does it mean, if anything? And then of course it's, I'm sure it'll all turn out different than the way it looks today. But what does it mean, if anything? I mean, you've got those regional packs. If they get that kind of cash in their pocket, it's going to impact how much they can pay for the fat cattle. So it might kind of falsely inflate cash cattle at some point. We don't have any understanding of the timing of all this, but that's what I'd be watching for. I mean, yeah, you could say, well, it's only 20% of the industry, Jeff. How does that matter? But you can get 3 regional packers out there bidding on cattle, and you can significantly change the cash cattle market because of that.
Very well. The herd is at a 75-year low, I believe. So, still not a ton of incentive to really expand the herd from the producer standpoint at this point. So, it'll be interesting to see how this shakes out. A little bit harder to just write the cattle guys some checks and influence that market the way they want. So, it'll be interesting. Any other final thoughts?
I think just we're really encouraging our customers, think about your inventory here. It's the right time of year from a seasonal perspective to really dig in deep and make sure we're comfortable with what our inventory looks like and what that coverage looks like. I'm not saying you have to run out and hedge them all, but maybe you can throw some floors on with some LGM. There's some new rules coming out, new crop year this year, so we can increase that ending weight on the LGM. We'll be digging through that here in the coming weeks, trying to figure out what our best approach is. But you can do some things that aren't super intrusive, at least kind of cover your baseline. So I think it's a good time of year in this whole cycle to be taking a really hard look at that.
All right. Well, thank you for joining us today. Have a fantastic weekend. Please click the link in the description below to get access to things like our daily market commentary and other cool market data that you may find interesting on our website at professionalagmarketing.com. Thanks for joining us today, Jeff.
Thank you, guys.